Morning,
Morning,
Lori.
Lazaro. Hi.
Let's see.
Just getting my volume up.
I cannot hear you. It must be on my end.
I can hear you. Can you hear me now?
Yes, I had to unmute my computer. All right, perfect.
So just letting you know that we are live streaming. I've got that set up.
Great.
Learn something new every day.
Hi, Richard.
Hello, good morning.
Morning.
Yeah, hi. And
Hello.
is it Lazaro?
Yes, Lazaro.
Hey, Lazaro, good morning. We thank you for inviting us. And I don't know if Gina wanted us to be available at the beginning of the meeting. I know we're just essentially introducing ourselves. So Kelly and I were going to be on at the beginning, but again, whatever your agenda is and however you want us to participate, it's up to you.
Gina had asked that you be added towards the end, but perhaps Lazaro, we certainly could adjust the agenda if needed.
Yeah, I'm looking at the agenda now. Just because, yeah, I'm thinking it's probably better to do it in the beginning. That way Richard doesn't have to stay on the phone.
I did have him towards the beginning.
Yeah.
Gina had asked for it to be moved, but I'm sure she'll be on and
Sure.
decide.
Okay.
Yeah, we're very flexible. I mean, if you said to us, call it, reconnect at 8:15, or it's up to you. We just didn't want to be not following instructions.
Right. Yeah, Lori, I definitely think, I mean, I'm not sure why Gina had put them later in the agenda, but I'm thinking, we have like a market overview and the investment stuff, and I definitely think it would be better to have Richard go before all of that.
I think she was unsure, Richard, if you'd be available at 7:45 in the morning.
Yeah,
Actually, that's right. That's what she told me too.
So.
and we're it's funny, right? I mean, no, it's easy. It's easy for us. No, we're happy to just be part of the very beginning, and then we'll sign off. Yep. Yeah. We haven't, we're not running the clock, so we could even stay for the meeting. It's up to you. We're ready, yeah.
Okay.
It's,
Let's see.
yeah, I'll let you continue with your regular business. Don't feel like you need to cater to me. I'll just go on mute.
Okay, let me yeah, I'm trying to see where you are in the agenda now, and then okay, here it is. And Lori, do we need Gina? I guess she's gonna be on from the beginning, right?
That's my understanding, yes.
So maybe we have, what do you think if we have Richard and Gina go right after Brittany Birmingham or
Yep.
before Brittany?
That's where I had placed this earlier.
Before
Then we
Brittany?
adjusted. So I'm sure it'll be fine with Gina.
Okay. All right, let's do that.
Yeah, and I'm not sure I know who all the people are, but as I said, Kelly and I are just here as a guest. We're not charging for our participation, so we can stay on, and then when you put us in, then we'll disappear afterwards.
Okay. Thank you.
Okay, good. All right, I'll see you in a few minutes.
Sounds
Okay.
good.
Hi, Lori.
Hey, Brittany, how are you?
Good. I'm under my TPZ name.
I was wondering what that was. I saw that come up, but I wasn't sure.
Yeah.
Morning, Brittany.
Hey, Lazaro, how are you?
I'm good. How are you?
Good.
Hello.
Hello.
Good morning, everybody. We'll give it another minute or so and then we'll get started.
This working? Hello?
Hi,
Yep.
Ethan.
Okay, I just want to make sure the sound was working. Sorry.
Good morning, Ethan.
Morning.
All right, it's 7:45. The meeting will come to order. I'm gonna let Lori go through the roll call. I see I think just about everybody at the meeting, and then I'll open up the meeting with some comments. Lori, please do the roll call.
Sure thing. Good morning. This is Lori Carney, Clerk of the Board. Perry Salonia. I think you're muted, Perry.
Sorry about that. 0 for 1. I'm here. Thank you.
Al Lebo.
Here.
Ethan Goldman.
Here.
Brittany Birmingham.
Here.
Peter Privatera.
Here.
Lazaro Guzman. Mayor Cantor. I see her signed in, but maybe she's muted. Matt Hart.
Here. Good morning, everyone.
Good morning, Matt. Chris Kashmar.
Good morning here.
Lee Gold. Paula Kanaki.
Here.
Gina Verano.
Here. And just for the group, I've also invited 2 attorneys from Shipman and Goodwin, who I will introduce more formally later in the meeting. Thank you.
And Rick Ledwith. Rick, are you there? I see that he's signed on. Okay, Lazaro, I think we're all set.
Great, thanks, Lori. Welcome to the September 13th regular meeting of West Hartford Pension Board. My name is Lazaro Guzman. I'm the chair of the board. This meeting is being conducted in a virtual format in accordance with the Freedom of Information Act as amended by Public Act number 21-2, which authorizes municipalities to conduct public meetings virtually. Members of the public can view the meeting live on West Hartford Community Television at www.whctv.org and www.youtube.com/WHCTV5. The meeting is also being recorded for on-demand viewing and will be available on the town's website for at least 45 days. Since we're conducting this meeting in a virtual format, there are some special rules and procedures that I need to cover before we begin. First, I ask all participants to mute your device when you are not speaking. If you wish to be recognized, please raise your hand and I will call on you in the order I see hands raised. If you're participating by audio only, or I do not call on you and the debate is ending, then unmute your phone and let me know so that I can recognize you. Second, main motions will be made by me and no second is necessary. We will proceed immediately to debate. These include motions to adopt, receive, or approve business items. Subsidiary motions will still require a second. These include motions to amend. A member must be recognized before making a subsidiary motion, but any member can second the motion by just unmuting their line and saying second. Third, all speakers must make a good faith effort to state the person's name and title at the outset of each occasion that such person participates in the meeting. Fourth, all votes must be taken by roll call unless the vote is unanimous. Fifth, a reminder that if any participant has a problem with connectivity, you should immediately call Lori Carney, whose phone number you were provided earlier. She will let me know and we will recess the meeting while the problem is resolved. If it cannot be resolved quickly, we will ask you to call into the meeting using a phone and participate via audio only. Lori's already done the roll call. So we're gonna change the agenda up slightly. I think Brittany was gonna go next, but we're gonna have Gina Verano introduce some of the members that we have from Shipman and Goodwin, if that's okay, Gina.
Sure, that's fine, Mr. Chair. Gina Verano, Deputy Corporation Counsel. I've invited the attorneys from Shipman and Goodman to join us this morning because I'd like to introduce them as pension counsel or new pension counsel for the pension board in the town. The relationship with this firm is a product of a request for qualifications that the Office of Corporation Counsel published. We had received 4 responses to the request for qualifications. Each response asked that the individual law firm provide a list of attorneys who would work on the file, a description of their qualifications, a description of pension and related matters work done to date, a representative list of municipal clients or municipal pension boards, and also a cost proposal. The RFQ and its submission were evaluated basically on 3 criteria. 1, experience, qualification, expertise of the law firms. 2, overall completeness, clarity, and quality of the proposals. And 3, the cost of services. As I indicated earlier, we had 4 responses to the RFQ. The Corporation Counsel established a selection committee to review those proposals. The selection committee is comprised of the Corporation Counsel, Deputy Corporation Counsel, Director of Finance, Director of Human Resources, and the Chair of the Pension Board at the time, Ms. Nancy Dean. The selection committee reviewed all of the written proposals and also heard oral presentations. Based upon the written proposals and the oral presentation, the selection committee unanimously recommended that the pension board and the Office of Corporation Counsel retain the firm of Shipman and Goodwin. At this time, Mr. Chair, I'd like to introduce Attorney Richard Cohen and Attorney Kelly Smith Hathorn from Shipman and Goodwin to give the board a brief review of their practice and perhaps representative clients to date. Is that okay with you, Mr. Chair?
Yes, thanks, Gina.
Okay, thank you. Through you, Mr. Chair, I'd like to turn over to Richard Cohen from Shipman and Goodwin. Thank you.
Thank you, Gina. Thank you, Chair. We are thrilled to have been selected. Kelly and I both live in West Hartford. It's rare for a lawyer to be able to represent their hometown, so this is a very exciting chance for us, opportunity. We're very familiar with the town. Obviously, I've lived in town for 20 years. And specifically to the pension board, this is a testament to you to have such a great turnout on a Monday morning, so early in the day. We, as Gina mentioned, have several other connections with the town. We do public finance work for the town through Bruce Chudwick. Matt Ritter handles some town attorney matters, and I think everyone probably is aware we have a longstanding relationship with the town of West Hartford Board of Education through Tom Mooney and other attorneys at our firm over the years. So specifically to pension work and who I am, and then Kelly will obviously speak as well. But in a nutshell, I've been at Shipman now 35 years. I graduated law school back in 1984, and I have practiced in the pension subject area now going on my whole career at Shipman. And I've been trained by Ira Goldman and Charlie Milliken before Ira. With respect to our proposal to the pension board and the town, we submitted that. Time flies. It was back in March. And as Gina mentioned, we were able to come and attend an interview process. We feel that our strengths are, we are very practical, we are very experienced, we don't over-lawyer things, we try to listen and achieve within the confines of the law the objectives of our clients. We're very familiar with governmental pension plans. Specifically, I personally work on the town of Fairfield. Kelly and I together work on the town of Glastonbury. I I work with the city of Danbury, the town of Deep River. If you give me another minute, the town of Greenwich, and I think the list goes on. There's nothing about what we're being asked to do for the town that is beyond our skill set. And again, I think we do almost 100% of our communication by email, telephone. We don't write long memos. We don't write long, unnecessary work product, and we try to get the town and the pensioners the benefits they're entitled to within the legal requirements. So again, we feel that being part of your team, we work with Fiduciant. We're very familiar with the team. You couldn't be in a better situation with them. And it's a collaborative effort all the way down the line. So I'm happy to handle questions. We're ready to hit the ground running. We've executed our written letter to the town, spelling out the terms of our engagement. So we haven't started the clock yet. We feel we're a team player, and our objective is to be a good member of the team. So let me hand this off to my partner, Kelly Hathorn, and I will be welcome to take questions afterwards. Thank you.
Thank you,
Thank you.
Richard. I'll be brief. Thank you to everyone on the board for taking time to listen to Richard and I this morning and to welcome us in. As Richard mentioned, we're very excited and looking forward to this engagement. I personally have been a pension and employee benefits lawyer for 15 years, that whole time at Shipman and Goodwin, since my graduation from UConn Law School. Richard and I have practiced together that whole time. I think we're in a unique position to be helpful to the town. As everyone on the board knows, the pension benefits promised by towns in Connecticut and elsewhere are unique animals. They're different than the pension benefits that are available to either not-for-profit entities or for-profit companies. Richard and I have lots of experience in dealing with these, and Richard mentioned some of our clients a moment ago. So I think that's one aspect in which we are uniquely positioned to be helpful to the board. And then the other aspect of that, of course, is that although pension benefits are one quite big piece of the town employees' work, it often touches other pieces. There often are side questions that come up when investigating a pension issue. And we're uniquely positioned to assist with those as well, because as Richard mentioned, many of our colleagues at Shipman and Goodwin already assist the town in other matters. So we've got the ability to kind of pivot and get the full picture for what the town is dealing with when a pension question requires it. So I won't take up any more time. And as Richard mentioned, we're happy to answer questions, but I wanted to thank you for this opportunity.
Thank you both. I'll turn it back to the chair. Thank you.
Richard, Kelly, welcome to the team. Thank you for joining bright and early. We look forward to working with you. Any questions for either Richard, Kelly, or Gina before we continue with our agenda? Does not look like it. Again, thank you for joining, and we look forward to working with you.
Thanks very much. Bye-bye.
Bye. Next on the agenda, I'll turn it over to Brittany Birmingham for Town Matters.
Chair, I have no updates at this time.
Great, thank you, Brittany. Next, Chris, take it away with the investment review.
Oh, great. Good morning, folks. Good to see everyone. Trust everyone had enjoyable summers and back at it again. The intention is, the agenda indicates, is threefold this morning. We do want to catch you up on fiscal year performance ending in June, and we'll roll in some more topical numbers on the heels of that. We have a couple manager statuses that we want the board to be aware of. And I know Ethan had posed a question around performance monitoring on a go-forward basis, and we can certainly share our perspectives and thoughts there on how we'll help you keep tabs on both the legacy pension and the new POB portion under your purview as well. So with that, Lori, were we going to share the big deck? Was that I'm trying to remember, was that our intention? The
Yes, Chris.
let me see here. See if I can. Just bear with me here, folks. Where is it? Can folks see that or no?
Yes.
We can see
You
it.
can see that? Okay, great. All right, great. Thanks, folks, for your patience there. So I'll select or highlight just certain pages here for sure as we work you through the information. I guess the only thing quickly before we get into the formal review, just for the board's edification, you see on the bottom of page 3 here, we do continue to hire fairly ambitiously. I think like everyone, right, with designs on growing thoughtfully, we want to make sure that we're accordingly resourced and most importantly, in no way inhibiting the services that we provide to the town. And so we've continued to build out with more individuals, and we'll look to do so on a go forward basis. So we're not compromising service levels for individual existing clients, excuse me. So from a governance perspective this quarter, you'll see for Q2 from a reporting standpoint, just quickly, a reaffirmation of the policy statement. So I know it wasn't too long ago that we reviewed this and looked at this, and I guess this morning our testament to the board is that we continue to think it's a good working blueprint and kind of has, as you see here, highlighted on the page, all the necessary elements of a well-functioning and well-constructed statement. We don't have any recommendations for the board from a policy statement perspective other than that affirmation. We've included it again here. It's just so you've got a reference to it, and at least once a year, obviously, we'll go through this effort and as frequently as the board desires if it's more than that annual review. But I think you're in good working order from that standpoint. Any questions on the IPS or? Okay, good.
Nope.
Doesn't see anyone on the screen asking, so that's great. And then just quickly from a
Yeah,
governance
I'm sorry. I did have a question there.
Oh, sure, Al.
This is Al Lebo, board member, and this is for the chair. Do we need to vote on reaffirming this policy once a year? Does that need to be done?
I've got to check if that formally needs to be done. I did see that. I think the last time we did it was in 2020. So let me check. I don't know if Lori or Peter know the answer to that. If not, we can circle back. And I know we've got a couple meetings left in the year. So I'll check and see if we need to formally do that. But Chris, from your perspective, you know, the IPS, from your perspective, we don't need to make any changes at this time, correct?
Yeah, no, yes, Mr. Chair. We think it's in good working order, and just to Alan's question as well, I think each town that we deal with is a little bit differently, right? Some simply reaffirm, others formally vote on it and update it. I think it's whatever the preference of the board is.
Okay.
This is Ethan Goldman, member. I have an icon on top of your screen. It could be just my computer, but it says resize to change the video. I don't know if there's a way to get rid of that.
If you click OK, because that was on my screen, I think it just disappears.
Got it? Oh, I went the second time. Sorry about that. I'm good.
Mr. Chairman, Pete Privatera, Finance Director. In the past, the board has updated the policy when the board felt it was necessary to make changes. So just to let you know, that's how we handle it in the past. Thank you.
Okay. So between now and next meeting, I think we can just all take a quick review of it and just confirm from each of our perspectives that it does not need any changes, and I think at the next meeting we can reaffirm it. Thanks, Peter. And thanks, Al, for the question.
Thank you, Mr. Chair. The only other thing I'd say quickly before we delve into the portfolio, we would also just remind this board in particular from a best practices standpoint, certainly is from our perspective, doing all the things necessary to meet your fiduciary obligations there. So we're not going to go through all these individually, of course, but just in terms of the structure and the cadence of meetings and the content and all that goes into overseeing the pension plan and related asset pools, we're certainly, again, from our perspective, think that the board is in very good working order and doing everything from a best practices standpoint that you should be doing. So just a simple reaffirmation there. And with that, we'll just spend a couple of minutes, if no one objects. I don't want to spend a ton of time on given that it's mid-September, a ton of time on what happened in the second quarter in particular, but maybe just more broadly what we've seen in markets. I think, as you all know, as we came into mid-year, the environment for risk-taking and the appetite for risk was still fairly robust, and it was robust for all the reasons that we've talked about on a number of different occasions over the last several meetings, and it's centered and starts with, of course, still fairly robust stimulus measures in place, right? More recently, you've seen the Fed and the European central banks starting to talk about modifying some of their efforts on the quantitative easing front, but interest rates, as you know, are all still very low, and certainly on balance, stimulus measures continue to run at fairly historic levels. Clearly, the Delta variant has offered up somewhat of a wrinkle here, but other than that, on balance, the vaccination efforts have been certainly helpful in terms of fomenting what has been really historically strong GDP growth. You see in the upper right-hand corner of the page there, just the compression of GDP activity at the front end of the pandemic and how rapidly it recovered with stimulus and as things began to reopen again. It has come with, certainly in the spring and through part of the summer, these expectations of slightly higher inflation. And inflation has indeed, on some of the measures that markets and investors look to, has moved a bit higher than it was running. Certainly not at we think, problematic levels. And we do think ultimately, similar to the Fed's testament, that we think that rates or inflation rather may run a little bit hotter than it has been. But again, likely transitory in terms of the sharper spikes we saw in the spring, and certainly not rising to levels that's going to impede ultimately the recovery, certainly alongside the hopefulness that this variant is knocked back. You do see, and we'll stop here with the macro and then get to the portfolio momentarily, but you do see in the lower right-hand corner this kind of thesis or this outcome we've seen in markets whereby we've had continued breadth in returns, right? Away from the large cap names in the US that had been so predominant early on in the recovery. You had seen through the middle of the year things like small cap and value and REITs, for example, and some of the commodity areas of the market really kind of offering some fairly strong returns. And again, remember when we talked in the spring, that is important, I think, for us as investors and for the board running a diversified investment program, because oftentimes those type of return patterns have been associated with more in the way of economic recovery, right? They've often foreshadowed solid macroeconomic activity on a go-forward basis. And indeed, if this pattern kind of holds true, we think, again, we might be mid-recovery on a global basis in terms of where things stand. Now, I will confess and admit readily, as you all know, we have seen more recently a little bit of a reversion to that U.S. large cap leadership in terms of returns. I think, as you all know, fixed income has been down a touch year to date. If you look at the numbers through Friday night, for example, small cap stocks have retreated a little bit. Again, all probably centering on the variant and kind of this somewhat halted pace of reopening. But on balance, we think the economy, continues to recover on a global scale. And that if you look at corporate financial health, it still by and large remains very solid. So we do think that, last several months of the year can continue to be conducive to thoughtful risk taking and kind of staying the course with investment strategies. Let me pause there for a minute. There's lots of additional collateral here and it's not my intention again to go through it all. I do want to get to the portfolio and get you those numbers and results. But anything from the board just on the broader economy or macro activity?
Chris, it doesn't look like it.
Okay.
I don't have any
Great.
questions. Thanks.
Okay, great. So I'm gonna forge ahead here for folks, and I'm gonna jump right if no one objects to the portfolio. I know you've got a busy agenda and want to stay on task here. So here's the portfolio at the end of June. This is just as you all know, right, before the settlement of the POB proceeds, right? So this is kind of the legacy portfolio running just at about $270 million. You see there, you'll remember we had been running consciously and by design pretty tightly to benchmark weights. And you do see the portfolio there is pretty darn close to those weights. We'll show you the DCA round one and talk a little bit about the monitoring there in just a moment. But just to keep you apprised of the legacy pension plan. So there's the allocation at the end of June. We'll talk about in a minute. I think this is always a convenient place to do it from a manager status standpoint. I think some of you may have seen in your packet, there are two managers that have noted statuses, non-maintained statuses, if you will. So something we probably should highlight here. Met West, you may, if you had the chance to see the memo we just wrote a week or so ago, has been elevated to discuss. The long-standing senior portfolio manager there and the architect of the strategy, Tad Ravel, is retiring at the end of the calendar year. And our analysts have spent a lot of time with their counterparts at Met West. Met West, as you probably saw in the memo, has a fairly strong portfolio and seasoned portfolio management team that is all trained under Tad and runs portfolios in a manner consistent with his infrastructure, if you will, and tendencies. No changes to that group. They'll continue to run the portfolio, we think, in a manner akin to what's attracted us and to you to the strategy in the first place. We think ultimately it'll be fine, but that change is of a magnitude that we do elevate the status to discuss, as I mentioned. We'll certainly keep you posted on that. Changes along the way. And then the other strategy during the quarter, 2Q, that did elevate to watch, you see down at the bottom, Hartford Diversified International All Cap. You might all remember that Marathon Asset Management out of London is the portfolio manager for that strategy. There was a change to the team. A pair of individuals who are running the emerging market sleeve, which is about a third of the portfolio, so it's a meaningful amount, left the firm, and Marathon has hired a new individual from Fidelity, who's been an emerging market equity manager for 20 some odd years with a very strong track record, honestly. But again, integration issues, a big part of the portfolio. Something that in our mind does elevate to a heightened status. So Harbor is on watch. No action from our standpoint that we compel the board to take this morning, just really more FYI on both fronts. The balance of the portfolio, the roster of managers is in good working order and on maintained status. Any questions there on, figured this was the easiest place to do those status updates. Anything from the board on statuses or legacy allocation?
Nope. Thanks, Chris.
Cheers. Great. Looks like we're in good shape. And then,
I'm sorry. I did have a question. Again, Al Lebo, board member. I noticed on pages 29 and 30 some of the performances here, and I noticed Silvercrest and Causeway both are recent performance was in the 90th, but 90th percentiles, and I'm wondering, any comments on that? Are we? Yep. Why are those not on some sort of watch list? What's going on with those?
Yep, absolutely. I'm glad you pointed those out. I actually have notes scribbled here for Silvercrest, so I can certainly give you those updates in a minute. and will absolutely do so. If just quickly, so folks, actually, you do see the aggregate portfolio numbers here in the middle of the page. So a little behind in the quarter, some of what Alan just mentioned. A couple of the individual managers struggled a little bit versus benchmark. You see the year-to-date number is pretty solid, and then you see a one-year number, right? I'm hard pressed to think, going back through the data in the years, to find another 12-month period when the portfolio was up 30%, but you do see there a pretty strong fiscal year for the plan, and contributions to that increment really from across the large swaths of the portfolio, equities and fixed income in particular. So I think on a composite level, performance remains very solid and stable. To Alan's questions at the individual level, as kind of highlighted, there are a couple of managers. Let's start with Silvercrest. You do see there that they were up 56% for the one-year period ending in June, and a bit behind the benchmark. If you look, and we're happy to share this with the board. I actually was speaking with our value analyst on Friday about this. If you look at what's worked best in the small cap value arena over the last year, the non-earning companies with no earnings are up 106% over that one-year period versus companies with demonstrated profitability that are up about half that level. The meme stocks that you've all read about have gone gangbusters. These are the type of stocks for someone like a Silvercrest, that runs with a very decided quality bias. They're, bluntly, to Alan's question, just not going to be in those areas of the market, right? It's not the way they invest. It's not where they think you can consistently harness incremental return. And they're just going to avoid those non-profitable companies that are in the benchmark. So I think, Alan, to your question, you look at the number in the vacuum, right? And you say 56%, certainly a heady return, but obviously not keeping pace with benchmark. The other thing too that you'll note there that is a pretty condensed peer group as well, right? So you see there Silvercrest certainly at the bottom of it over the last year. Those numbers kind of, the benchmark is not shown here. It was actually a very competitive representation as well versus those active peers, just to give you a relative perspective there. So I think that Silvercrest is investing entirely consistently with their mantra, right? And I think we've hired him for that quality bias, and think that's the best way over time to do well in this space. So we don't, Alan, I guess we've talked in the past, right? The analysts have a thesis around a manager and monitor that thesis aggressively. And to the extent that there's a backdrop which is not conducive to a style for a manager, they're willing and able to kind of accept that and process that, right? So it doesn't necessitate into a status change strictly on the numbers alone, right? It's married to that philosophy and what the analyst knows about the return profile of the strategy. So this is, that's a long-winded way of saying, right, over the last year, this has been a market for Silvercrest, given how aggressive the non-earners have done, that they will and historically have struggled to keep pace with the benchmark and some peers maybe that are less disciplined with that quality orientation I mentioned. So I guess that's the story there. I don't know if it satisfies your question or not, but that's kind of the thinking behind why there's no change to the status despite the weak relative numbers on a one-year basis.
That's helpful. Thank you.
And that right, and that general framework, right? As you all know, we've talked about it many times, and I know it's of interest to the board. And right, so the analysts are really up and down the portfolio, right? Tasked with having that deeper kind of qualitative understanding of strategies, right? And it's not just a gut reaction to a performance figure. The other one I think that you mentioned, right? So was it, so Causeway year to date, right? Again, another situation, if you look at the one-year number, right, and the longer dated numbers, they have certainly been up the task as your developed market value manager. leaning manager. But over the last couple of quarters, value stocks have been performing fairly well, and we've had kind of a rotation back away from that overseas. And again, Causeway is a pretty disciplined value manager, does not cheat on style, and as value stocks have come off a bit, and particularly the way Causeway interprets value, that's a little bit of a relative headwind versus the benchmark and some peers over the last few quarters. Again, as we've talked about a million times, right? There's, in our minds, much more data and inference to be drawn from the longer dated numbers. And you see there that they've been pretty consistently up to task longer term. The last manager I might mention, just maybe front running a question, Barings you see down at the bottom of the page there versus the Odyssey benchmark over the last year. So you do see there that Barings is a bit behind the benchmark. Barings made the decision fairly early in the pandemic that they were going to not be discriminate with underwriting, re-underwriting some of their properties and taking those appraisal knocks, if you will, early on, kind of recognizing some of the challenges. So they've spent the last year reworking the portfolio, moving away a bit from the office space and retail and into things like industrial and multifamily. So they were probably among their peers the most aggressive that we saw in terms of acknowledging some of those property challenges. So they took their decision was to take those appraisal write-downs right up front, more ambitiously again than some of their peers. I think that's why you see the relative numbers there over the last year suffering just a little bit. But again, talking to the analyst, he thinks that they've been very thoughtful with that, conservatively oriented with that approach, and thinks the portfolio is set up on a go-forward basis to do pretty well. They've tended, as you all know, to run with less leverage too than their peers, and that's been a little bit of a relative headwind, but again, one we've been willing to accept. This is as plain vanilla, clean, and as high grade a property, a collection of properties as we monitor, and I think we've talked that being kind of desirable attributes for the year program. So that is.
Can I ask you a question on the real estate?
Sure, Ethan. Yes.
All right, Ethan Goldman, member. I was just curious. You have percentage rankings of all the other investment categories. Why none on the real estate?
Yeah, it's a great question. It's a little bit of a quirk in the system, Ethan. So the Odyssey index there that you see, it's kind of a funny moniker, a mismoniker, if you will. That Odyssey index, these are actually other managers that make up that number. So the real estate benchmarks are a little bit different than some of the public equity and fixed income benchmarks. So this is not we list it as a benchmark, but it's actually the performance stream collectively of all the other managers in Barings peer group. So it's kind of right. It's a little counterintuitive to have a universe ranking when it's not really an index per se. It's actually a collection of returns. So that's okay. It's a little quirk in the system, honestly, from a performance reporting standpoint. But that's what the Odyssey represents. I think there's about, if I remember correct, I think there's about a dozen, including Barings, about a dozen managers that make up that number.
All right, thank you.
Chris, before we leave Barings, just another question. I think you were sort of alluding to this. Just, within the real estate space, obviously office space, the outlook looks very challenging or somewhat challenging given the pandemic and more folks kind of working in either hybrid models or working from home. Kind of maybe make some specific comments to the fund's exposure in office space specifically. And then from a write-down perspective, do you think most of the write-downs are behind us, or kind of what do you think as we think about office going forward?
Yep, and we can get you, Mr. Chairman, certainly detailed numbers, but in speaking to the analyst on Friday, so a couple of things as I alluded to, Barings has been actively reworking the portfolio and its complexions. So again, they did take very aggressive write-downs versus their peers at the front end of the pandemic, with a particular focus on the office space. Acknowledging, I think, on a go-forward basis, some of the challenges there. They have been reworking the portfolio on the margin and eliminating some of those office properties from the portfolio and reinstituting or reallocating it again in favor of things like industrials and multifamily. So in talking to the analysts, I think they've been particularly active over the last couple of quarters, instituting some of these changes, and probably to a greater extent than some of their peers. So when I kind of left my conversation with him, again, he said, Chris, I think that the message for the board is on a go forward basis. They've done a lot of the work that we think they needed to do to reorient the portfolio. You do see it in the numbers on a 1-year basis for sure. But we think going forward, they've kind of repositioned themselves nicely into some of these higher margin and better areas, if you will, in real estate, and away from some of the office building exposure that I think we're all collectively, right, a bit concerned about going forward. So I can get you the exact numbers if you'd like to see those. I don't have them in the report here. But that is the story, and I think it is one that's encouraging to us. They have been a fairly ambitious and taken a conservative mentality, and moreover a proactive one to rebuild the portfolio a bit.
Yeah, I'd be interested in seeing just, and again, I think for the meeting, your overview was, was sufficient, but just seeing a little bit more numbers on sort of the exposure to office and even retail is another area where, there's been some challenges. So, if they have like a quarterly report or anything you can send us for, kind of reading at our leisure, that would be great.
Sure, absolutely. It's interesting in the retail space, right? You'll remember, just, and we'll leave it at this, but it's just an interesting, I think, kind of factoid. They've often been not the, retail in the way of, big mall type complexes, but these kind of anchor store complexes, of this, kind of necessary retail, if you will, is kind of the mentality or the verbiage that they use. And it's kind of an interesting spin. But to the chair's question, we'll certainly get you more details on Barings.
Thank you.
And then the other thing, any other questions on 2Q? I didn't want to go on too far there, but wanted to make sure we answered all the questions you may have. So again, a fairly solid 1-year return, certainly for the legacy pension plan.
I don't see any hands, Chris. Go ahead and proceed.
Okay, great. So the other thing, with me folks here, the other thing, Lori, and I think I'm having some headline issues here too. Can you, Lori, share on your screen?
Actually, and Ethan, did you have your hand is raised on I just noticed that. Do you have a question?
That was from my prior question. Sorry about that.
Oh, no worries.
I know everyone, we do want to get to the POB here quickly, and I'm just, let me see, folks, if I can do this. I apologize. My system has been.
I'm trying as well, Chris. But
let me see. Do people see that on the screen?
Yes.
You see the September update?
I do, yes.
Okay, great. So we did want to roll in a little bit.
I'm sorry. This is Al Lebo, board member. I'm sorry, I didn't realize you were leaving the other deck entirely. I did actually have a question before we leave that deck.
Okay.
So on page 40, there's this thing that shows how we did in up markets versus how we did in down markets. And I had two things I wanted to ask you about this. Give you a chance to catch up there.
Yep.
Yeah. So the first is it looked to me like in up markets, while we performed a little bit better than the benchmark, in down markets, it looked like it was quite a bit larger down, than the up market is up. And so I wondered if you had any comments about why that is. And the second question I had is, can we get this by fund? I'd be very interested to see which funds, cause this kind of discrepancy.
So to add to Al's question, we certainly can. It's a data point that our analysts look at, so we certainly can get you the individual manager capture ratios for sure. I'm just making a note here so I don't forget it. And show you those. It's a good, it's a good question. Al. I'm not certain. I think some of what is impeded the relative down numbers over the last several quarters maybe is just a byproduct, just a more market functionality and some of the attributes of when markets have really had momentum and when they've not had momentum and sold off. And I don't know if it's a glaring issue across the managers in mass in terms of them, for example, being more aggressively positioned in the broad market. So I think what I'd like to do, if you don't object, is let me look through those numbers in a little greater detail and kind of decompose them a little bit and kind of come back to you with the particulars on why the shortfall in the down markets, if that's okay.
Yeah. I mean, I found this very interesting. And like I said, if you could show this by fund and give us more detail on it, I'd be very interested to see that.
Yeah, let me do that. It's a good question, and I just don't want to speak out of turn on it. Let me actually look at the data itself, and then we'll certainly come back to the board with some additional perspective there. Anyone else on the big deck? If not, just quickly, I do want to stay on task here. I know you've got other things to chat about. So we did, Ethan had brought up a fair point around performance monitoring, so we'll roll that in momentarily. But just quickly, through September, we did want to share some data. Again, this is background. I'll leave it at the board's desires to consume it. It just gives you a little color through September, but I did want to just get to the portfolio detail quickly. So just to kind of catch us up, right? We talked about the portfolio itself through June. The bond proceeds settle in early July. We worked with Peter and the staff and Wells Fargo pretty closely on kind of integrating all these things. We did do dollar cost averaging strategy 1 in July. And you see those balances there in the column in the middle of the page, unreconciled, but they're pretty close nonetheless. So you see there $330 million up and running in the pension plan. And then moreover, we're getting ready with October 1st to institute a dollar cost averaging phase 2, consistent with your edict. So you see some of the basic arithmetic there. A couple of things just that we don't have to settle this morning, but things for us to think about. First, to Ethan's question, we absolutely are going to be rolling in your next quarter of production, the POB portfolio itself. If you all remember, that portfolio is a trio of short-term conservative fixed income strategies that we're using. And we are obviously tracking and monitoring that. And our intentions, again, for your third quarter reporting is to have pension performance, the POB performance, and a view into some collective performance. So I know that was Ethan's question, and we're certainly prepared and willing and able, and I think share your intent to track all those pools individually and collectively. So that'll all be coming in subsequent reporting. The other thing that we will need to start to scratch the surface on and think about is as you continue over the course of the next several quarters of injecting, we'll call it $54 million a quarter into the portfolio, we do maybe want to begin to think about in certain segments of the portfolio whether that larger size requires a different complexion from an asset allocation perspective, right? Does it evolve a little bit? Do we need a couple of more managers from a capacity constraint in some of the areas of the market? For example, small cap in the US, maybe overseas. Are there other asset classes that you want to look at and investigate, given that the portfolio is right on the surface, more than doubling in size over the next 18 months? So maybe in fixed income, we do things a little bit differently. So those are not questions to answer this morning. but things to be aware of that we'll want to model and talk about in subsequent meetings that we've got, right? The complexion of the portfolio is changing, and we want to be certain that you're comfortable with, maybe there are things we need to do structurally with the portfolio, given its larger size, that we'll again need to talk about and investigate in coming quarters. Again, not an action item for this morning, just more an FYI. So that's where we kind of stand as of, more topically the last couple of months, just in terms of dollar sizes and whatnot. It's not in your paperwork, but just so you folks know, kind of front running a question perhaps. I'm looking at, looks like we've got $269 million right now in the POB program. Again, 54, that'll be coming out for the October run. And again, we can get you all those, we'll get you all those details discreetly with our next round of reporting, but we're obviously keeping active tabs on it with Peter and again, running the program that you had set forth in terms of thoughtfully injecting the monies into the legacy pool. Mr. Chairman, I'll stop comments there and take any questions that the group may have.
I've got a couple of questions, Chris, but I'm gonna let my our colleagues just give them an opportunity to see if they have questions first. So I'm scanning to see if I see any raised hands. I guess a couple questions. One, you talked about maybe changing the complexion of the portfolio. Maybe for next meeting, if you can sort of identify areas where you think either we may have capacity issues, like in the small caps, kind of thinking more long term, or areas where, as we think about the end sort of once all the money is invested, if we've got two funds in fixed income, on a dollar basis, position size, and so I would look to you. I think the board would look to you to kind of identify some areas where, specifically, where we might want to focus some attention to tweak the portfolio, if that's okay for next meeting.
Absolutely, and thanks for the perspective. That makes perfect sense from our standpoint, and we'll do so.
And then in terms of Ethan's question, for next meeting, I know you're going to have more detailed reporting. So maybe at that point, it would make sense to sort of react to what you're giving us. But are you gonna track the performance of the proceeds sort of separately from the rest of the port? That's what it sounded like, and maybe just kind of high level, what are your thoughts to sort of track how are the proceeds doing from an investment perspective versus maybe versus a break even, and then versus our plan, kind of what we expected. And again, maybe I'm thinking that we don't spend a ton of time on that today, but maybe some high level thoughts, and then once you have that more detailed reporting, at that point really have something to react to and have a more detailed discussion.
Yeah, so I think the framework that we've thought of, but would welcome input from the board, is we'll kind of breaking it into its components and then rolling it up into the aggregate. So certainly at the individual POB fund level, right? You've got 3 short-term managers there that are all running portfolios, and we hold them to obviously performance standards, and we want to see how collectively they're doing versus their representative benchmarks. So we'll kind of individual at the pool level have that number, right? We'll have the performance of the legacy portfolio, if you will, right? As it receives new monies and that money gets put to work, and how those managers do through time, the reporting you're accustomed to seeing. And then I think, Mr. Chair, and I've got to kind of work our way through this with our performance group, but I think our intention as well is to try to segment and bring together a number that reflects both of those pools as well, kind of under the collective board's purview, and have some type of a consolidated or composite number that shows both pools together. So we're trying to show you the individual pieces and then the roll up and use that as the basis for some of the tracking that you mentioned. And I know some of the kind of the strategic objectives you have from a return standpoint, how the portfolio is doing versus The bond rate versus actuarial expectation, some of the other markers and measures that we've got to be sensitive to and aware of. So that's kind of the basic framework we've thought of and the construct we've thought of. But if the board would like to see numbers in different permutations, I think we can do whatever you'd like to see. But that was our kind of initial thinking on how to build it.
Questions? I know, Ethan, you had some questions, and again, we'll have some reporting to react to, but any thoughts from the board at this point prior to getting something more concrete from Fiducian?
So,
Go ahead,
good.
Ethan. Yes.
Ethan Goldman, board member. I don't know if it's Chris, Peter, or a combination. I think it's great to see how we're doing against the market, but there was a plan originally, and I realize there were a lot of modeling done, but we should be targeting against something. So 25 years, whoever's here will be able to say, okay, this is how they did. I think it's going relatively well, but I'm just basing it based on what I remember the initial model that I saw was, and I think it's important to be able to measure it. Particularly, we're going to probably the first year or two, because of we're doing the average cost, averaging in, it's not going to be as good as you all projected, but there was a reason for that, and just it's reconciling. So we could do something like that, that'd be great. And maybe if Chris could send out some sort of examples before we have the meeting, that would be really helpful.
Yeah, I think that's a great point, Ethan, right? And that was our thought, right? Because in a way, if you look at the legacy performance, that's almost like if you were fully invested with everything, but you've got the POB as kind of a relative drag. So we can see what that number is, bring those numbers together so you can say, what's that kind of track record versus we put all the money in at once, right? Like, I think part of your point, just having a sense of that drag through time and keeping tabs on that. So that's certainly our intention.
The town borrowed less money than it originally had planned, so that should be reflected as a positive, and we should be able to track the different points. So that's what I'm used to.
So. Alan, did you have a question as well?
Yes, thank you. I'll leave a board member. Yeah, so what I was kind of envisioning as far as tracking how this POB program performed, a little bit hard to describe in words, but year over year, what I'd like to see is for the actuarial firm to show us, how our assets actually changed versus what was projected using the 6.25% expectation versus what would have been projected based on the actual proxy indices, their actual performance. So they have a model which was used to put this plan in place. And within that, they modeled several scenarios, and each of those scenarios said, if the S&P does this and the NASDAQ does that, and et cetera. But what we can actually see year over year is, the S&P really did do this, and the NASDAQ really did do that. And so year after year, if they could show us, based on how the proxy funds performed, here's how the plan should have performed in a comparison of that. And that's what I would like to see year after year in the future.
Yeah, I think it's going to be, and Alan, were you thinking that would be more Fiducian, or is there a combination of reporting that we would also want from our actuary as well, in terms of just kind of overall reporting and the modeling and the assumptions that they had done, and how are we tracking versus those?
Yeah, it would mostly be using the modeling that the actuaries did. The only thing Fiducian might provide would be the proxy fund returns as input to the model.
Yep. Okay, so it sounds like we need to also talk with the actuary in terms of some reporting and in terms of tracking. So let's do this. Let's see what we get in terms of, I think, Chris, you've got a good idea in terms of what you want to provide for next meeting, and we've got some time. At that point, we'll see what, kind of specifically what are you what you're reporting on. We'll have some comments, and then we'll think about how to integrate any sort of reporting from the actuary as well.
And we do, Mr. Chairman, I do have a running tally of some of your other requests too, on bearings and Mr. Lebo's comments on portfolio level capture ratios and some of Ethan's thoughts as well on performance monitoring. So we've got our tasks, I think, lined up and documented, and we'll certainly proceed accordingly.
Okay. Folks, we've got 15 minutes. Thank you, Chris. We've got 15 minutes. Peter, you've got a question?
I'm sorry, Mr. Chairman. Unfortunately, I have an appointment I have to go to. I just wanted to report if I know I'm not next on the agenda, but I just wanted to report that I have no items for discussion today, and if I could be excused from the meeting so I can get to my appointment. Thank you.
Thank you, Peter. And yes, I believe we still have a quorum, so no issues there. So, folks, we've got 15 minutes left in the agenda. We still have a couple, quite a number of things to move through. Any other questions for Chris at this point? Ethan?
I don't know if this is a Chris or who it is, but as well as tracking the performance of the investments. And I know the town's already doing this in their financials, but it would be good also to look at the actual expense on the expense side. So we, is that staying in alignment, or is that going higher, or is that going lower, just as far as the overall pensions? So we're measuring the expense as well as the revenues. So I'm not sure who, I assume that's not Chris, but I think that's something we should also be measuring. So I'm good.
Yeah, I'm thinking that the tracking is it's gonna take some time to sort of develop, the report to reflect the tracking that we'd like. So that's gonna be a work in progress, and definitely we've got some time, and we'll try to address some of those, over the next couple of meetings.
Okay, I appreciate that. Thank you.
Yep. Oh, you're welcome. Thank you for the question. Anything else with respect to investments? Doesn't sound like it. Thank you, Chris. And we'll keep an eye out for those follow-up items via email. Thank you. Next on the agenda, we've got the meeting schedule. Rick, I'll turn it over to you.
Morning, everyone. Rick Ledwith, Executive Director of Human Resources. Our remaining two meetings for the 21 calendar year are October 18th and November 15th. Those meetings will be held virtually. If there are any scheduling conflicts, please let us know.
All right, thanks. So everybody, let's just kind of confirm offline, make sure that those dates are still work for everybody, and let us know if there's an issue.
It was October 18th, and what was the second one? I apologize. In November?
November 15th.
Thank you.
Thank you, Rick. Next, we've got some formal actions. I think, Lori, I'll turn it over to you for that.
Well, actually, so the first is the minutes, approving the minutes from the virtual special meeting held on Monday, June 21st. And my understanding, I think, Lazaro, is that you would make the motion, and then I'll take the vote.
So I'll make a motion to approve the minutes. I did have one tweak. Maybe we can still make the motion to approve pending an edit. Lori, on page 6, there was language around the investment dollar cost averaging and the investment window over 18 months. Because we're doing it over 6 quarters, but at the beginning of the quarter, it's not exactly 18 months. So I just think if we could keep our language consistent over 6 quarters, and then we don't have, that would resolve that issue.
So are you saying in section, I think it's section VB1, you're requesting a revision?
Yeah, let me see, page 6. Yes, B1. Over the
And so
course
how,
of, yeah, over the course of 6 quarters.
okay,
Of each
so
quarter. Yeah.
you're asking for the minutes to be revised and removing the reference to 18-month investment window and replacing it with a 6-quarter investment window?
Yes, correct. And the only reason was because, again, because we're investing at the beginning of each quarter, the full duration wasn't exactly 18 months. And I think I don't want to, I want to be consistent. We did all of our conversations, I think, with rating agencies was all 6 quarters. So let's just leave it consistent at that.
So then I guess the question for the board is, with that revision, are you comfortable voting on the minutes with the suggested amendment, and then I can present them at the next meeting? Or if you want to hold off on the vote and wait for the amended minutes and vote on these in October?
From my perspective, because the amendment is small, I'm comfortable approving, pending the change, with the change.
I wasn't at the last meeting. This is Brittany Birmingham, member. So I don't know if, do we have a quorum even to vote on them?
It's a good question. All right.
So we have I think we've got 4 remaining to vote. Wait, we've got Lazaro, Al, Perry. I think 4 out of the 6 is a quorum. Rick, would you be able to confirm that?
It is.
Okay.
Yeah.
But if Brittany abstains, then we just have the 3. So maybe we should wait till next meeting anyways.
Well, I guess if I, so I.
Oh, actually, no, we do. We actually, if Brittany, I'm sorry, if Brittany abstains, then we do have the 4.
You still have the quorum. Yeah.
Yeah.
Right. So I'm comfortable moving forward and voting, and then Lori just make the change, assuming there are no other changes.
So I'll take the vote on the minutes. Oh, well, actually, Lazaro, if you could make the motion to approve the amended minutes.
Sure. Motion to approve the minutes from last meeting.
Okay, so Brittany Birmingham abstaining.
Yep.
Ethan Goldman,
Approve.
Al Lebo,
Can I just make sure I understand exactly what the wording is going to be here? So this is now going to say, 1, determine structure of dollar cost averaging of proceeds over the course of a 6-quarter investment window. Is that what we're saying?
Yes.
that's my understanding. Yes.
All right. Yes, I vote aye.
Okay. Perry,
Approve.
and Lazaro.
Approve.
Okay, motion carries. Thank you.
Thank you. Next, pension administration. Motion to approve pension administration. Which is in everybody's
Rick
packet.
Executive Director of HR. Under Pension Administration, we have 35 new members being added to the plan, 16 non-vested withdrawals, 2 vested withdrawals, 2 members who previously purchased retirement credit, but will not use that towards a retirement, so the plan refunds those monies. And then under other, we have 6 members of one particular bargaining unit who contribute 1% of their salary towards a cost of living benefit. And language in the contract does call for employees hired after 2003 to stop contributing that 1% once they've hit 15 years of service. So the folks on the list contributed 1% after 15 years. So we're refunding those amounts to those employees. Be happy to answer any questions that folks have with that prior to your vote.
Al, do you have a question?
Yeah, Sally, board member. Rick, how is this does this a normal procedure that it gets overpaid and then it gets refunded, or is what, or how does this, how, if you could explain what's going on here?
Yeah, so normally what would happen, Al, is payroll would catch that at 15 years, and it's a manual process, unfortunately. So when we went back and audited it, we realized for those folks, we had not stopped that contribution at that point. So that normally would not happen. Normally, it would automatically shut off once they hit 15 years and they'd stop the contribution. But they continue to make that contribution past the 15-year time period.
But it's a manual process, so it won't automatically stop in the future, right?
Well, now that we've uncovered it, it will. So this was, again, it was something that was negotiated back in 2003, and it just, one of those things that the time period came and went, and we didn't catch it. But
so will it be automated in the future, or will it just be a procedural thing that will be followed in the future?
Lori, do you know did Tracy tell you what would happen?
Well, it's only, Rick, if you remember when we looked at the contract, it's only for employees and professional management that were hired after 2003 and before 2007. So it was a small number of employees, and it was that particular provision of the contract had been overlooked or missed, and then payroll did catch it. And so then there was a refund. They researched what they owed to those individual members and refunded that.
And so that's all done. There's no, everybody involved in that's done with it at this point?
They've been made whole, yes.
Okay.
Any other questions for Rick? So motion to approve pension administration?
Okay, let me take the vote. Brittany Birmingham,
Approved.
Ethan Goldman,
Approved.
Al Lebo,
Approve.
Perry Salonia,
Approve.
Lazaro Guzman.
Approved.
Thank you, motion carried.
Next, we've got invoices for consideration. And I think, Rick, I think there was one group pension benefit information that I think you were going to give us a little bit more information on.
So we have the under retirements, we have 19 normal retirements since the spring, 1 early retirement, 1 disability retirement, and 1 vested interest retirement. So you'd vote on those separately before we get to the bills.
Okay. Motion to approve those.
Excuse me, I thought when you made the motion to approve pension administration, we were including those retirements. Did I misunderstand?
Does that fall under that same category, Lori?
It does.
It
Okay.
It does.
Sorry, I missed that.
But certainly, I mean, if anyone has any issues with the retirements, you know, everybody approved it, but if we need to go back, we certainly can go back and discuss.
No, I mean, I think the assumption was these are all standard. So I thought we were approving those under pension administration. Was there anything non-standard here?
There was not.
Okay. So Lori, can we just leave our previous motion and approval, leave those and then move forward with invoices?
I believe so, because we did have the motion to approve pension administration, and the retirements are included under pension administration.
Okay, great. All right, moving to invoices for consideration. Again, I think, we all have these in our packets, the invoices from Reed and Riga, but I think we also had pension benefit information, which, Rick, I believe you were going to give us a little bit more information on those.
Yeah, so PBI is a service that we use to utilize that we ensure that we do not miss when a plan participant passes away. So we could, if we obviously miss one, we would could be in an overpay status with the family. So we utilize this service to help us kind of supplement what we do internally to ensure that we don't miss any participants that pass away. And it's an annual charge. So we get that bill once a year.
Al, do you have a question?
Sorry, yeah, I do. Al Lebo, board member. So we get charged for this once a year, but is this done on a like monthly basis, or how often is this done?
It's done. Yeah, go ahead, Lori.
It's done weekly, actually. We get emailed weekly with a report. So sometimes there have been no deaths, but we'll get the report, and then other times there are deaths, and so we do get the report to verify
Okay.
that.
And if there's a report of a death, do we then follow up to question whether that has actually occurred, or what happens after we're notified that that this service believes that there was a death?
Well, they utilize a number of different ways to pull information of a retiree death. If a family has contacted Social Security to stop benefits, that's one resource. They also search obituaries on behalf of the town. And so if it's something that is information coming to us from an obituary, then we have to validate that. They base it on like the name of the person, date of birth, but it's not validated. And so then when we receive that report with the name, date of birth, we've got to validate that it's our retiree and not just someone with a similar name. So yes, we do validate that, but they do report it to us. And so we have that information, and we have to research it on our end.
Yeah, no, and that's what I was asking. Once we're notified, what do we do to validate?
Well, like I said, we get the name, we get the date of birth. Oftentimes through that resource, they'll provide an obituary. So then we'll view the obituary and match it to our records. If the particular person the name that they're providing us lives in a different state, to our retiree, then that's one reason that we're thinking that that's not one of our retirees. But there's certain things in the obituary that will kind of cross match with our records to see if it's the same, to see if it's one of our retirees.
Okay. All right. Thank you.
Any other questions before we leave pension benefit information, PBI? Okay, I wasn't going to go through Reed and Riga individually unless folks have any questions. There's an invoice here for 2,058 that was in the packet. There was another one for 580 also in the packet. And there was a summary of the questions that were being researched by Reed and Riga. I'll take any questions at this point. If not, I'll make a motion, but let me pause for questions. Motion to approve payment of the items under invoices for consideration.
Okay. Brittany Birmingham,
Approved.
Ethan Goldman,
Approved.
Al Lebo,
Approve.
Perry Salonia,
Approved.
and Lazaro Guzman.
Approved.
Okay, motion carries. Thank you.
Thank you, Lori. Thank you, everybody. I think we've covered everything on the agenda. So with that, motion to adjourn the meeting. Actually, before that, my apologies. Any new business that anybody wants to bring up? Ethan.
Just to be, the issues I raised will be addressed in the next meeting. That's all. I didn't expect anything today. I just want to make sure they're.
Yeah, and I think it's, again, Ethan, it's going to be a work in progress. Yeah, so next meeting and then the meeting after. But I think to your point, we want to have the right reporting and tracking in place.
Okay. Yeah, I just think I've always been where you measure, so I just want to make sure we're measuring what we expect. Thank you.
Thank you. Any other new business? Perry?
Yeah, I just have a question. So when would be the next meeting where we'd get an updated report or presentation from the actuary? Do you know when they're scheduled to come in?
I'm not sure when our next actuarial meeting is. What's that?
I'm not sure if that's something that, Chris, were you gonna be involved? Is that a kind of a combination between your reporting and the actuaries? Like, would Peter be coordinating that?
First Kashmar, fiduciary advisors, I believe so, Lori. I can talk to Peter if the board directs us to, and we can arrange for Milliman's participation and.
Yeah, I think let's do this, Chris. Why don't you let's take a look at your reporting. Maybe if you can send that out prior to the sometime prior to the next meeting, we'll review. We'll have some comments. Peter will be at that meeting. We'll talk about what sort of data items might be missing that would also involve the actuary. And at that point, we can we can talk about scheduling them and having them be part of the reporting. Al, question?
Yeah, I mean, my understanding is that there's no like scheduled meeting with the actuaries, that they will come in if we ask them. And so I think, as you were saying, Laz, that, this will be a work in progress as far as the tracking thing. I think we really have to sort of build our tracking, build out what we believe the tracking mechanism should be, and then ask them to participate in that.
Yeah, no, I agree 100%. And so what I'm saying is let's see what Chris comes up with in terms of, a straw model for tracking in terms of what sort of data items. We'll spend a little bit more time next meeting specifically talking about things like, maybe we want a running tally of all the interest that's been paid, principal paid versus all the earnings for that group. We can start to talk about it, but let's first have Chris give us his reporting and tracking, what he thinks. And then from there, we can, we'll have something to react to and we can develop it out ourselves with any data points that we might want. We can do that before the meeting, but I just think, let's have something to react to.
Yeah. Yeah, and Chris, I'll be happy to work with you on my thoughts as to how this would work.
Same. Any other new business? All right, folks, motion to adjourn.
Now, typically Nancy didn't ask me to do a vote, but I guess I will.
Why don't we do this? All in favor, if we don't get any, you don't have to go name by name. All in favor?
Aye.
Aye.
Any opposed? Anyone opposed? I guess not.
Thank you, everybody, for joining, and thank you, Lori, for your part. Thanks,
All right.
everybody. We'll see you at the next
Yeah.
meeting. Thanks.
Have a good day.
You too.